The U.S. Bureau of Labor Statistics reported that total non-farm payroll employment increased by 263,000 in September, and the unemployment rate edged down to 3.5%. Notable job gains occurred in leisure and hospitality as well as healthcare. Monthly job growth has averaged 420,000 thus far in 2022, compared to the 562,000 per month in 2021. So we're talking NFP report, which means we're talking jobs, and so it only makes sense to look at the US dollar and the US dollar strength. So here we are looking at the DXY chart. I've got it on the 1 hour. Let's just go ahead and see what NFP did to the dollar this morning. So here we can see this is 6 and 7 a.m. So this is just before the news event. The news was released at 8:30 a.m. Eastern time. So looking a little bullish right before the news, and then we have this big green candle right here after the news. So the job reporting was better than expected, a little better than expected, and as a result, big strong green candle after the news. And we're seeing another little one here, and we're seeing a red one forming now. We'll see how this one closes, but at the moment, looking bullish for the dollar, especially over the last day or two, looking bullish for the dollar after NFP. Now, that's not the only thing we're going to look at. We're going to look at some US dollar pairs as well. So we have Euro USD here, which gets a strong sell score in the Edgefinder. We have a score of 7 here. So we're selling the euro, buying the dollar. US dollar has a lot of strength right now. The euro, not as much. We can see COT data and retail sentiment, both scores of -1. Looking at the US dollar, 73.77% long here, and only 54.4% long for the euro. And keep in mind, all of this data is incredibly up to date after today's news event. If you look right down here, right at the very bottom of the screen, we can actually see that it was updated at 10:35 a.m. this morning, which is only a couple minutes ago at the time of this recording. So up-to-date information with our NFP reports in. 63% long here, 37% short on the retail side. And let's go ahead and move on to USD CHF. USD CHF is a buy here, buying the dollar, selling the Swiss franc. We have a score of +4. COT data comes out to +2 and retail sentiment +1. Looking at these numbers here, we just saw 73.77% long for the dollar, and on the Swiss franc, 36.42% long. Overall, 34% long and 66% short here on the retail side. And I should mention as well, unemployment numbers. So we have unemployment here for the US dollar sitting at 3.5%. That is what we're looking at when we're talking NFP reports. Let's compare that to the euro sitting at 6.6% compared to the dollar's 3.5. Again, dollar 3.5. The Swiss franc actually sitting at 1.9%. And then we're also going to take a look at gold. Going to take a gold really quickly. Gold is selling, according to the Edgefinder, strong sell, score of -6. Our COT data here, again, is same number long for US dollar, of course, 73.77, but gold sits at 57.19, and retail 43% long and 57% short here on the retail side. So gold is looking like a sell. Let's look at gold in trading view as well. So XAU USD. Here is gold on the 1 hour chart. And look at that candle from today's news event. Gold has been having some crazy swings here. I mean, from this giant green candle back here on Monday, strong green candle looking really bullish. And then news comes out, and that is heavy to the downside with one tiny green candle right there. I don't even know if you would call that a candle. And it looks like currently we have another red candle forming. Now let's see what our head trader, Trader Nick, had to say about the US dollar as well as dollar pairs after today's non-farm payroll event.
If we take just a quick look at the dollar against the CAD, right? And we zoom out, right? Take a look at the dollar CAD. The CAD has been getting smothered. Take a look at the Australian dollar. The Australian dollar has been getting smothered by the dollar. If you look at the dollar against the Japanese yen, the dollar has been killing it against the Japanese yen. Euro dollar, we don't need an introduction there. Euro dollar has been absolutely slammed in the last year by the dollar strength. Why is this dollar so hot? Well, it's because comparatively speaking, people are fearful of a recession, so that sends them to the dollar. The Federal Reserve is incredibly hawkish, meaning they're wanting to raise rates. And that is incredibly bullish for the dollar, right? Because that makes bonds more attractive here in the US. Look at bond yield, by the way, which if we take a look at the US 10-year, it has skyrocketed in the last year. I'll show you guys, like I said, I have USD CHF open. So I'll start with a trade that I personally am in. No, trading view warriors. I love that phrase, by the way. Shout out to Raja Banks. He said on Twitter, he was like, a lot of traders are just trading view warriors, where they only ever show charts and stuff, but they never show like trades being placed. So there you go. I'm putting in my transparency to the best of my ability. I know it's not the craziest trades or anything like that, but I'll show you guys real trades all the time on my channel. So I'm up $800 on this trade. I took a loss yesterday on CAD JPY, but this trade has been going very, very well. We are long here earlier on this week with this little rally that's done kind of nice. What I'd like to see though is I'd like to see the dollar Swiss break out, of course, to the upside. That's what I'd like because I'm long. But if not, I think it might be interesting to watch here today. If you get a miss on jobs numbers and you are still bullish on the dollar overall, it could offer some volatility to possibly pick things up, right? So there might be a pullback play. I am overall pretty bullish on the dollar, fundamentally speaking, until we sort of see a crack to this Federal Reserve hawkishness. I'm overall going to be pretty bullish. So we'll take a look at XAU USD. We'll pull this one up and see what's going on with the gold market. So recently, gold has seen a little bit of a strong move to the upside. We've seen a little bit of a rebound. But I've been mentioning this. I don't want to be the naysayer or the hater on gold, but as we rally like this, I am definitely concerned. I'm more bearish than I am bullish on the dollar, on the gold market. You might say, why, Nick? It's got a nice strong move to the upside. Well, just be cautious on the daily chart, because look at the daily chart. Very clean downtrend, right? We've got a lot of momentum. And as this thing pokes higher, you have to be cautious that sellers, from the swing trading perspective, aren't just trying to get a hold of it before they shoot it to the downside and continue. Now, it could break out. I'm not saying it can't. I'm just saying that from a trend following perspective, the trend here to the downside looks a little bit weary for longer term, bearishness here on the gold market. So as we rally up into like the 50-day moving average and we see a little bit of rejection, we also have resistance zones that might be worth paying attention to, right? You've got this resistance that just got tagged here in favor of the sellers. They're seeing a little bit of a sell-off there. So I'd be very cautious as we rally up into this on the daily chart, that you're not just buying into a major level of resistance. So there we go. When I'm looking at the gold market here today and we narrow in a little bit on the hourly chart, there actually might be a beautiful breakout retest. Honestly, either direction. So gold, we'll clear charts and I'll show this. So remember, higher time frame, we are seeing gold at a major level of resistance. So that's kind of part one. But part two is what if we get a breakout of that resistance to the upside today? So let's say that gold shoots to the upside. What would cause this? Well, probably weak US dollar news, right? So weak jobs numbers. If weak jobs numbers hit the floor and we see the gold market take out the previous high here on the hourly chart, that could lead to some break and retest opportunities intraday, right? Now, I don't necessarily think that this support level, I think this is very, very risky support level. And this is just, my opinion, my take on it. Please trade your own strategy. If you have something that works for you, Don't let what I'm saying like annoy you or offend you. I'm just giving you my take. Oftentimes people disagree with my analysis. It's just my analysis. I'm not always right. I'm not a perfect, guaranteed, always winning trader. Just like everybody else, I take stops. I take, losing streaks. It happens, right? So this is just my perspective. When I look at the gold market, like I said, a break above the highs is, in my view, maybe short term. There's a nice little bullish run before sellers could possibly try it again. But then on the other side of the trade, and this is the part of the trade that I actually like more, would be the sell side if you get a break of support. If this support falls apart here on the news, if we get US dollar news that comes out very strong, that could put pressure. It could apply pressure to this support zone and get us underneath that area, right? From there, if we get a breakout of that zone, there could be opportunities to try and sell this thing into the weekend. That's my opinion, right? So if I'm looking at the gold market, again, I would be more interested in this trade scenario than the bullish case scenario for gold. And again, just going to be dependent on this. Now, of course, I have my dollar long position open prior to the news. I'll go back to that. We can watch the spike on my trade to see if I make or lose money off of the move. That might be entertaining for some of you guys. But let's just assume for a second that we get a big shoot to the downside here on gold, right? If we break that level, right, we break support. If that happens, and it's an if this happens, right, possibly breaks, retests, and continuation plays could be within reason. But where could we target? How far could the gold market drop? Well, if you're going from a higher time frame perspective, gold could come all the way back down to the lows, right? But if you're talking more shorter term, if you're more of an intraday trader, we have some pretty relevant support here, right? So that might be a reasonable target. Maybe not, of course, in the one single day of trading. Possibly in the next couple of days, we could see a sell-off. But again, I'm not trying to forecast what the news is going to do. I'm trying to react. So case number one, remember the bullish case scenario, break, retest, continuation. And same thing on the sell side, which I mentioned, I think is more attractive to me overall. A quick look at the Edgefinder with gold for those of you guys who are watching it. Let's go look at the commodity market. We'll look at gold. And we'll pull this up and get a view of what's going on with the gold market. So the gold market is kind of neutral with a slight bias to the downside. We've had a little bit of bullish momentum here recently, so that's why it's kind of hesitant. But if we get the breakout to the downside, we could see this trend reading flip instead of to the positive momentum right now. We could actually see that flip to the downside. So longer term, right, it's in sort of a downward trend overall, but short term, we've got this momentum. So again, going back to our scenario 1 and 2, if we get the break above, that could lead towards more bullish momentum, right? Possible pullback plays, etc. And if we start seeing the failure at support, it could be the opposite, right? Guys, please in the chat, spam the numbers once you have them, the jobs numbers, the unemployment. If you see the numbers, please feel free to share with the group and let's see what the spike is looking like. Okay, so we're moving to the upside here initially, the S&P 500 dropping. The dollar coming in strong, gold coming out strong to the downside here. It's just the initial move though. We got an initial spike here of 27 pips here. We got an initial spike of 600 pips to the downside on gold. Look at the S&P, my goodness. That thing just collapsed. My gosh, that's a massive move to the downside. The dollar Swiss franc continuing to push higher. Wow. Big move to the downside there on gold. And again, we're watching to see if this level can break the lows, 1700, kind of that psychological level. And of course, 3700, a big psychological level for the S&P 500. We're watching to see, wow, pretty good number. Let's see what everybody had to say. Some people were sharing the numbers, 288K jobs. So more than expected US jobs created, which is of course, 263. Strong jobs numbers here, beating expectations by about 60K. That is a strong jobs numbers here in the US. Of course, going to cause the dollar to likely rally, which as we just spoke about, the likely case scenario for gold is watching to see if we can break this low. If that breaks, there could be that move. And then S&P 500, again, rallying to the downside or dropping to the downside, but finding some buyers pretty quick. So maybe the S&P 500, just going to have a little bit of a mixed response to these jobs numbers. Wow. Okay. So crazy. big spike to the upside there initially for the dollar move. My trade here looking pretty good. We'll pull this up here for a moment, see what's going on with some of the individual charts. So here's gold coming down to that level, but not quite breaking it, right? So still holding that support level. Why is my drawing so big? The gold chart coming down, but not quite breaking it. We'll have to watch to see if this thing, again, candle closes are a big deal, right? When we look at the hourly, especially to see if we can actually close below a level like this before we make any sort of assumptions, right? Because right now we seem to be getting a bit of a wick reaction off of this support zone, which could just lend towards back and forth a little bit here today. Wow. You could be a sports commentator, Nick. I think I'll stick to markets because I don't know that much about sports, to be honest with you. Wow. Big spike to the downside initially there for